Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, March 29th, and we are looking at Window Trader's market profile of the ES and SPY. A lot going on here, but it's still all in balance. First, let's recap what happened yesterday and why that has an effect on today. Yesterday was the smallest range of the year, and it was in the top 10 lowest volumes of the year. Said in last night's video, would you be surprised if we gapped higher? For two reasons. Number one, the range is so small, and number two, it's been the year of the gap. Well, this is the 60th trading day. We're looking at our 31st gap, excuse me, of the year. Emotional trading continues. However, gap or no gap, we're still in balance, okay? We are still in balance on this daily. This is the top of our balance for March 22nd. That's the real important one for two reasons. Number one, if you're able to ever get above that, you would have the weekly go from balance to up, and also the daily would go from balance to up. So even though it's a nice gap, actually the gap is bigger than the range we had yesterday. Yesterday's range was 280. Right now our gap is, well, almost the same, 2.5. So it's on light volume so far this morning. Right now the pre-market volume is only 600,000. So again, emotional trading taking over. NQ. Remember, I called them down yesterday. Well, they're coming right back to balance as they gap higher. Again, their balance high is up here. So they're coming back into balance after sellers failed yesterday to really get a push below the daily balance low. And righty, inside day yesterday, coming out of it on a gap, you go with it and you monitor it for continuation or lack of. So as far as the game plan, we're going to be bumping up pretty close. Well, we were bumping up pretty close to the 50-day moving average, which was just under 400.50 in SPY. We're now $1 below it, $1.50 below it. So if we're to get up anywhere near that range this morning on the opening, I would look to short that the first time. Again, I'm not a gap and go person. The gap is too large. It's $2.50. The overnight inventory is going to be totally long. We have a double distribution in the overnight and SPY, as you can see, right? Around the 397.50 level, and from last night, 396.71. So if this was to pull back about $1 or so, I think that's a good risk reward long to take against that the first time. I'm definitely going to be looking for better risk reward on a long, so I would be waiting for it to pull back. We are up 0.9%, so buyers right off the bat are going to have gap, value, and indices. Three powerful things, but we also know gaps have not held this year. Now, this gap is fairly large, so we'll see if it does. But again, early play would be a short at the 50-day moving average in SPY and possibly at 40.50 in ES, okay? Very visual level. And then look for a long on a pullback. In ES, it could be around the halfback of overnight right now, which is around the 22 level. Again, it's still 75 minutes to go, so that could change. But if we were to get a pullback around that level. Remember the 16 wide overnight POC that I was carrying forward? Still carrying it forward. Instead of an upside destination, it's now a downside destination. So emotional trading, again, ruling the trading world. Tomorrow we have GDP, Friday PCE. Again, I still think we're going to stay inside of this 6-day balance until then. But at least we're getting some movement today. That's a good thing. And then just quickly on the chart. So here's the weekly. The week of March 20th is the balance high. You want to take that out for a lot of reasons. Number one, the weekly would go up. Number two, you can start looking to take out the succession of lower highs. And number three, you'd be getting above that lower high trend line from last year. So all very important stuff for the bulls to try to accomplish. And on the daily, same thing. If we ever come out of this balance, we'll be above all three of our moving averages if we're able to take it out. And again, you'd stop that succession of lower highs. So the high of March 22nd is really a key level for bears to defend and bulls to overcome. Thanks for the likes and subscribing. Good luck trading today, and we'll recap at 4 p.m.